Welcome, everyone, to the greatest show on earth, hosted by two guys in pirate sweaters. With that conditional, I can say that with certainty that we are indeed the greatest show on earth. This is the Pirates of Finance. The handsome man next to me is the young Hemingway, Jason Buck. I'm his co-host, Corey Hoffstein. Jason, it is the giving season, but you want to know what the one thing we're not giving is advice. Nothing we say on this show is advice. Look, you shouldn't be taking financial advice from a bunch of clowns like us on the internet. If you're doing that, you're the whole circus, you know? So don't do it. Sit back, maybe grab some eggnog, have some fun. It's the Christmas edition or the holiday edition. Celebrate what you will. I don't judge.
Man, you got me with like three things right off the jump. One is you remind me of "Not my monkeys, not my circus" is like one of my favorite quotes. Like when anybody's like bringing you some crazy problem.
I have no idea what that means. Not my monkeys, not my circus.
Yeah, like when somebody's bringing you their problems or whatever, or their craziness, you're just like, "Not my monkeys, not my circus." I can't remember where it comes from. Yeah, it makes me laugh every time I think of it. So that's why you made me think of that one. Two, I don't think you've had time to watch it today. I sent you earlier. YouTube trends for next year, and one of them it was shorter intros, like no intros, because intros, like, people have to click off right away because of intros. And I'm like, it's basically all the trends for next year are everything we do wrong. It's like the opposite.
Well, I just want to say every year I feel like there's a whole bunch of trends and interesting things you can do, and so much of the industry we're in is like, oh no, you must have 2 minutes of regulatory compliance disclosures at the beginning of every podcast. Oh, reciprocity is a cool idea. Let's send some people some cool gifts. Nope, can't do that. Like, there's just a bunch of cool stuff you're not allowed to do. Unboxing. What is unboxing a mutual fund or an ETF? Like, I wish I could send people a cool box if they bought any of my product. That's not going to happen, right? Like, there's just a lot of cool business things that weirdly you don't have, which I guess in some ways, like, constraints potentially breed creativity, but there's a lot of cool stuff I wish we could do.
Well, we've sent coffee before, but I think we've even nixed that because of regulatory burden and compliance constraints. But that was what we talk about. You and I are under different sort of compliance regimes in some sense, but we're still both under FINRA. So it's what you cannot do. Yeah, like sending coffee, you wouldn't think it's a big deal. I did, I paired it up with my favorite coffee roaster in San Francisco, Ritual Coffee Roasters. And this is a few years ago. Yeah, we sent all our clients a bag of coffee. But once again, it's like, how am I tap dancing on compliance here? Just send my clients coffee.
Yes, you absolutely are. So look, I prepared for this show. You talked about watching some of the stuff you sent me. I prepared for this show by watching about an hour of finance YouTube. And it infuriated me. It infuriated me. And it's so frustrating to me because there's so much bad content out there. And there's one video, actually two videos I want to highlight. One was a video that talked about the difference between index funds, mutual funds, and ETFs, which is like a nonsensical comparison, right? Because a mutual fund and an ETF can be an index fund, right? Like, an index fund is not different than a mutual fund and an ETF. ETFs and mutual funds are just a type of packaging. It's like asking you what kind of box you want something in.
Yeah.
And then the stuff in the box determines whether it's active or indexed, right? But this person made a 20-minute video about the distinct differences between index funds, mutual funds, and ETFs that could not have been more incorrect, and yet was said with the utmost confidence.
I was thinking, what's in the box? You remember, like, from Seven?
Yeah,
Just tell me what's in the box. What's in the box? No, it's why I hate when everybody starts to bag on like hedge funds. I'm like, what is? It's like getting mad at LLCs. It's like, what's in the box?
It's just a structure. Yeah, it's mind blowing. And so, but there's this new trend that maybe it's showing up on my TikTok. One of the things I realize is everyone has a distinctly different TikTok, but there's a whole trend on TikTok of like fitfluencers going into stores and talking about, oh, you shouldn't buy this, and like food shaming. And there's a guy who basically stands there and he watches their videos and keeps pausing. He's like, this is why they're full of shit. Let me explain why they're full of shit. And he just literally, he spends all of his TikTok videos are him just dismissing other people's bullshit TikTok. And that part of me just wants to like do that for finance YouTube and just be like, this is full of shit. This person's full of shit. They have no idea what they're talking about. And yet I need to appreciate everyone's on a little bit of a different journey of learning and education. I don't expect them to know everything I know, and I don't know everything in the world by any means. But it is just frustrating when someone's just out there just putting incorrect, like factually incorrect content out.
Oh man, like, and to clarify, the one you're watching on TikTok, just so people know, it's like they'll be like, look at these chemical ingredients in there, and they look these long names, and he's like, that's sodium. You know,
yes,
like,
exactly.
Like that's a binding agent. Like it's not like he just kind of like breaks down what they are in layman's terms. Is like just not true. Like, and that's the fun part. But so you open up, to me, you're opening Pandora's box, right? Like I think that I would think about how much I would say about. So Gary V, started off on wine education, right? And we got a little bit of feedback going. Can you hear that or no? No. I can hear it myself, so who knows? It's probably my fault. Anyway, when Gary V started out, he did Wine TV or whatever his original wine show was called, and basically he shat on a lot of wines, right? And obviously audiences love that. So I remember when we were talking about, my girlfriend, as you know, does a lot of social media content with wine, and we're like, why don't we just celebrate the wines you like? And we don't need to, if you don't like it, just don't talk about it. You don't need to shit on it, knowing that will hurt her viral growth. So like you're saying, it's like, you don't want to shit on anybody where they're at in their journey, but it would get good. But then it also pisses you off because people are putting misinformation out there. So I don't know. That's a really fine line. I don't even know what to say like to you in response to that. It's like, I get what you're saying. And yes, it's annoying that there's bad content out there, but also you don't want to like shit all over another creator at the same time.
Yeah. The other ones that really got me going was all of the videos about getting paid dividends and like, make $100 a month by investing in these 2 stocks to pay you dividends, or like people who are just like, I'm going to create this dividend paying portfolio and I'm going to keep reinvesting the dividends. And in 10 years, I'm going to get paid $100,000 a year in dividends. And I get like why dividends are so tangible. And there's a whole section of YouTube literally just dedicated to dividend investing. And dividends are this weird, like sacrosanct thing in corporate finance and investing. Like they have their own weird little realm, when in reality, like a dividend is just one of many choices a company can make with the capital they have on hand. It's, really no different than a buyback. It implies potentially they don't have great reinvestment opportunities or other growth methods. But at the end of the day, all you should really care about is total return. You can always create your own dividend by just selling some stock. So the whole idea of dividend investing, unless you believe that companies that consistently pay dividends are of higher quality and therefore you're going to earn a premium over the market, like if that's a strategy, fine. I may agree or disagree, but just to pursue dividends because you want the payment is like a violation of Finance 101. It makes zero sense. And by the way, is going to be tax inefficient if you're doing it in a taxable account.
Oh man, you really want to open Pandora's box, because actually before
I got to tell you, I was like, I am going to prep for this show with so many ideas by just watching Finance YouTube. And all I did was like go pure Hulk mode. I almost threw my laptop against the wall.
The only one I watched before this that has Finance YouTube was actually Hugh Hendry, so I'm not sure if I got anything out of that besides, like you're saying, pure Hulk mode, and at the same time,
you got a contact high, is what you got.
Yeah, exactly. But part of it, so okay, dividends. This is interesting because right before we were getting on, I was thinking about what's the Fitzgerald quote that like to Fitzgerald, like intelligence is the willingness to hold 2 contradictory ideas in your mind at the same time. And, you and I hate attribution quotes because like, I think it actually goes back to Aristotle. So like, it's turtles all the way down. But the idea though, like you just said is, I've had a lot of these conversations this week, and it's interesting. Like everybody wants income, right? So holding 2 ideas in your mind at the same time, like you're saying, this is not an optimal solution to want dividends, but yet everybody we talk to wants dividends and passive cash flow. And for the audio listeners, I'm in quotes saying passive cash flow because there's no such thing as passive cash flow. You're managing your managers at best. But it is an interesting dichotomy of holding these two different ideas. Is like, you may know optimally dividends is not the best move, but it's fascinating to me how many people want cash flow and love cash flow and quote unquote mailbox money. And even though it's suboptimal, is it really that wrong? Like, are they wrong to just want that cash flow, even though they're paying taxes? You know, they have different distribution. They may not be in the best companies if we're talking about dividends. Sometimes, you know, whether we talked about real estate or anything other, like it's, as you say, it's more optimal to pursue capital gain and worry about creating your own cash flow out of that. But I'm not so sure people are wrong to want the cash flow, even though a quant would think it's suboptimal.
Yeah, I mean, God, there's so many ways to take this. I would say one of the interesting considerations is that if at the market level, if the entire market is expressing an aggregate interest in dividend paying stocks, the two competing ideas we have to have in our mind is those stocks will be overbid and overvalued, and therefore their forward return should be lesser. But there's this new whole field of research out there saying, well, actually, you know, buying creates price pressure. And if more people are interested in those stocks and are systematically buying them, and that can actually drive the price up over the long run relative to peers that are being underbought. Very competing ideas. But look, I have no issue if you're trying to immunize cash flow, right? I watched another video. This guy was talking about buying a very specific ETF I don't want to mention. Was talking about the wonderful cash flow that was coming out of it, and it's a covered call ETF. So they're selling slightly out of the money calls to harvest some income. And he was saying it's wonderful because the income I get from this ETF is high enough every single month that I'm paying my mortgage with it. And part of me was frustrated because I was like, I don't think this person really understands what they're doing in selling the call. They see the income coming from it, but they don't understand the total return profile. They might actually be better off in the long run just holding the underlying. I think it was an S&P underlying, and just selling a little bit of that every month to offset their mortgage. But on the other hand, I would say you have institutions everywhere who have liabilities that use bonds, right, to hedge their liabilities. You have a pension that has long-dated obligations. They have cash flow needs. They'll immunize that by duration matching using bonds, or cash flow matching if they can using bonds. I don't get upset about that. So if an individual has a mortgage and they want to immunize their mortgage payment, I'm not sure I'm upset with it. I think the part that upsets me, and I'm using air quotes for those listening, is when they're doing it in an inefficient way. Like they don't actually understand their immunization is potentially giving up long-term returns.
Well, and it's completely different. We start talking about covered call strategies and using that to pay your mortgage.
Yeah, right, exactly.
The expectation of future income from a covered call strategy. Yeah. And like you said, I watched a first few minutes of that video you sent me. It's like, yeah, clearly didn't understand what they're even investing in. But at the same time, you know, I've talked about a million times. Most people that buy ETFs have no idea what they're investing in.
And yet this YouTube creator has hundreds of thousands of followers. And he made an entire video about how brilliant he was for doing this. And that's where it's like a little scary to me. And again, I don't ever want to yuck anyone else's yum. But when you're out there promoting things that are incorrect, just factually incorrect and potentially dangerous to someone else's personal finances, I don't know. I feel like I'm at the point that I want to correct the record. Yeah. But who the hell am I to do that?
No,
I'm just a dude in a pirate sweater.
But you are a good person to correct the record. But it makes me think about multiple things at the same time. One is, you know, we always talk about everything good is at the fringes, right? A lot of the information about any industry or anything, you know, speaking of like Gell-Mann amnesia, is most people are putting out garbage information that's, you know, factually erroneous and quite frankly, potentially dangerous. But, you know, there's not, you know, that's the mainstream almost always for the entire history of humanity. And then maybe the good stuff's at the fringes. And the second thing is like, so is it incumbent on you to correct it? The other one I was thinking about is like, how do we not how do they get around? How do like personal finance people get around like disclaimers, FINRA? Like that's what I'm saying. If you're giving advice to buy ETFs, like how is that not regulated if we have to be so highly regulated with everything
So
we see?
there is a newsletter exemption that the SEC has.
Right, right.
That if you are not directly, so this is the weird thing, like providing direct advice to someone about what they should do with their money versus just generally talking about
Blanket
things
advice.
like,
Yeah.
yeah, there's some exemption that people rely on from the SEC. Now, by the way, I don't think these financial YouTubers are even aware of this exemption.
No.
I don't think they're even aware that they might get caught up with some of this SEC stuff. A lot of them just blanket say this is not financial advice, hoping that, and then they go on and give financial advice, right? Saying it is not enough. You actually have to avoid giving financial advice. But I think some of them probably do cross the line without realizing it.
By the way, Menahem asked, can an ETF that reinvests dividends from the holdings allow you to not pay taxes on the dividend if you do not trade the ETF units?
No.
It's absolutely. Well, but that was on audio. We're both shaking our head no. Just I just wanted to be clear about that.
Yeah.
It sounds like silence on the audio side.
Yeah. The answer is no. You will get pass-through taxes on that.
Right. And that's why you use total return futures, like for if you want to get any sort of leverage on any of those strategies that you're putting inside an ETF. That's the way, because you're not getting dividends on total return futures.
Well, but the problem there is you have the roll, and so you're realizing
1256 contracts too. Yeah.
Right. So you're realizing potentially gains every 3 months. So that's actually typically less tax efficient. I mean, if you're holding the S&P 500 in an ETF and you're getting, a 2% dividend, 3% dividend, that's mostly qualified dividends, it's the best taxes you could possibly pay at the end of the day in terms of like the rate. So,
well, yeah, that's the other question. Yeah, what's the dividend income tax rate? So it's better, like you said, better than most. But it reminded me of what's in the box. Just so we're pointing out all of these things of what's in the box, and it's just a vehicle. Is that you and I talk about this privately all the time? Is like not all ETFs are tax free. That's the other thing that I think a lot of people miss. People think just because it's an ETF that means tax free. No, you have APs that have to make a market. You can't have dividend income. You can't have 1256 contracts. All of these things will trigger a taxable event, and I don't think the vast majority of the investing public knows that just ETF does not mean tax free. It's not.
Yeah, and I don't blame the investing public either, because the nuances here, there's a lot of them, and if you don't understand what allows an ETF to avoid a tremendous sum of the taxes that mutual funds pay, then I don't know why someone would know this necessarily. And by the way, I should point out, mutual funds can actually do the same thing ETFs do. There's an entire company dedicated to helping mutual funds wash out their low tax basis holdings and wash in high tax basis or high cost basis holdings so they can avoid taxes. Mutual funds can do it. It's just a little harder and doesn't happen as easily because they don't have that create redeem process that ETFs have.
I'm trying to think how I can even say this. It's like I can say that the heartbeat transactions in ETFs seem to me to be very close to dancing on illegal wash sales. But is that within compliance bounds for me to say it that way?
You could say you think that it seems close. I agree. I think it's fascinating that this tax loophole has existed for as long as it has. I mean, if the entire industry were to move from mutual funds to ETFs, the amount of money the government is going to lose in cap gains is pretty meaningful, right? And I have to imagine people in the government are aware that they're going to be losing that money over time. So, that said, are they going to go against 20 plus years of precedent and I guess almost 30 now and shut the door?
No, I mean, when I heard about heartbeat transactions over a decade ago, I was like, this is not going to last long. They're going to close this loophole down. And that's before ETFs were massive. And now they're massive. And then when you have BlackRock, Vanguard, like all the big lobbying firms in there, there's just no way they're going to shut that down just for their tech. Because just the populist uprising now would just be too much. They had a chance 10, 15 years ago, but I can't see it anymore. But then again, crazier shit happens all the time. But also I was thinking about on this, because, this is, this is actually a really relevant or topical argument for me, because I've had multiple arguments this week about income and cash flow. And I was in a private argument about how, like, almost like you would say, that's go for capital gains, figure it out on your own, create your own dividend income stream if you want, doing other things you can do within the tax laws. But then right while I was having that conversation, saying, look, most people I talk to in that, let's say, $5 to $50 million range of, of personal assets or investable assets, they all want cash flow. And this person was like, that's ridiculous. And while we were talking, I was getting another text about a new client that was in that range, upper end of that range, looking for cash flow. And so I always wonder, I always have this idea that, when you get into this industry, you probably either read, Buffett or Market Wizards first, right? So you either came in this industry as a value investor, or you came through like the CTA side. But I also wonder now is like, how much has Rich Dad Poor Dad had all these unintended consequences now, all these years later, where this is the first book every teenager maybe read or their parents gave them, that now all they think about is cash flow is king. And that's all they ever want to think about is cash flow, and not realizing what the ramifications could potentially be of that cash flow.
Yeah, again, I think it's one of those things that cash flow is very tangible. If a company's giving you your cash back, you go, ooh, it to a certain extent, it feels like, right? They can't make a poor investment, right? They can't throw my money away. I'm getting the money back, and I'm gonna get repaid for my initial investment after a certain amount of time, and then I can just let that ride, right? So I understand it to a certain degree, and I think business owners are constantly thinking about cash flow. So why wouldn't you think about cash flow from your investments the same way? They love when cash gets kicked off, because it gives them the opportunity to then take it and make investments elsewhere, right? If I make a private investment, the money's just stuck and I can't reuse it. But if I start getting cash kicked back to me from that private investment, great, I now can redeploy that capital. Liquidity is important to me. So I understand it on the private investment side. The public investment side, again, I go back to, what is it, the Modigliani theorem. That's like,
yeah,
it's the same. It's
the same.
You can manufacture your own dividend. It's really a question of, does the company have a viable investment? And if they don't, right, if they don't have any good use for the cash, they should distribute it to shareholders. And those shareholders should then evaluate whether it makes sense to reinvest in a company that just gave you cash because they don't have anything good to invest in. Like, that's the funny thing about this dividend investing stuff to me, right, is so many times they just reinvest it right back in the same company with a drip program.
Yep.
Drip program is like an ATM machine, I guess. Like dividend reinvestment program, drip program.
Yeah.
But you know what I'm saying? Like, if the whole point is they're kicking off the cash flow because they don't have any internal projects that can grow at a rate higher than their weighted average cost of capital, why are you buying their stock again? Like, wouldn't it make more sense to take that money and then buy the broad market, maybe?
Right, but now you're getting into more nuances, and as our homie Meb always talks about, it's like people get really upset about stock buybacks, but it's the same bucket as dividend, right? It's the same, just different, tax consequences. So like you can act accordingly, like you said, or buy a broader index, or switch out of that, it's long short portfolios all the way down, right, Corey? I mean, it's just
By the way, anyone who's really interested in this sort of stuff, Mobison just published like an 85-page treaty on different uses of capital among public companies and what can be done, whether it's that mergers and acquisitions, dividend, buyback, how they're treated differently in the market, how their use has changed over time. It is a long piece, but if this is sort of if you're digging this conversation, go give that a read.
Yeah, and that's like you said, it's long. He's put out multiple long pieces in this last few months, but also at the same time, like you're saying, I'm sympathetic when anybody tells me they want cash flow, even though it may be suboptimal. Like you said, I'm a pragmatist, and to me, this is why you never go full quant, because sometimes your clients are emotional and they like the stability of mailbox money. So I can't argue with that. Like if that's what you need in your life and that makes you feel better, that's fine. Or if people like own their houses, free and clear, that may be suboptimal too. But there's a great argument for peace of mind too. So I mean, none of us are getting out of this alive. So if you want to run anything suboptimally, but you feel better about it, that's your own prerogative.
Yeah. Talking about running things suboptimally, Jason.
Nice segue.
I think I've been running my podcast suboptimally. I called you about this right before the show a couple hours ago. Full disclosure for everyone listening. And then I said, no, I want to hit you with this live on the show. So do a little name drop here. I'm name dropping. I was chatting with Patrick O'Shaughnessy really quickly in the Twitter DMs. Invest Like the Best, owner of the Colossus Media platform. I think we both agree it's a pretty impressive platform. Probably one of the most downloaded investing podcasts out there. And I was saying to him, I'm a little bit frustrated with my podcast, Flirting with Models, because the feedback I get from my listeners is so insanely positive, and yet I feel like the listening sort of stalls out around 10,000 an episode. And Patrick said, look, 10,000 is amazing. You're already in the top tier of podcasts. You know, going from 0 to 10,000 is a lot harder than 10,000 to 70,000, right? So you're already going. But his view was that by doing a seasonal show, I am breaking habits. I'm asking people to form a habit for 3 months and listen to my show weekly. And then I'm getting them addicted and the drug. And then I go silent for 9 months, basically, while I personally rehab my brain, because doing these seasons is soul sucking. As much as I love my guests, it is just an arduous process for me. It doesn't come naturally. And so Patrick said, you should just really do it weekly or bi-weekly or just sustainably, continuously. And that his view was that will help you. And I said, well, I don't know if it's feasible. And he said, well, that's why I have a team that helps me do it. Said, well, I've got my team doing other things. Like, this is still a solo project for me. I can't dedicate my firm resources towards this. And so my thought was, at this point, I have 5 seasons. I have well over 60 hours of content from amazing past guests. My thought was, what if in the off season, I had sort of a special archives episode where I would publish 5 to 10 minutes of past episodes that I thought was really interesting. I'd record a really quick intro of, hey, this is, season 3, episode 7. This was a really interesting comment. This is why I think it's interesting. Hope you enjoy. And I just do that for the 9 months between seasons. And that fills the sort of gap and keeps people who maybe are new to the show that don't want to go back and listen to all 60 episodes, gives them some content in the meantime while I'm creating new content and mentally recovering between seasons. So I don't know, your thoughts. Like, you're a guy who runs a podcast and you do it a lot more continuously than me. How do you think about running that business?
Speaking of two minds about things, then I got 2 minds on this one, especially because you and I both, and I probably even more so than you, I always try to keep up with, podcasts, YouTube, TikTok, like what's going on, what people are using, what tactics and hacks work, and how people build audiences. And I'm always like looking at those things. But what I always find watching any of them is everybody's guessing. And they all think what's going to work for like the YouTube algorithm. I mean, 6 months, a year ago, we were talking about the different thumbnails of like making the oh my God faces and everything on the thumbnails. Like, does that work? Telling people to like and subscribe. Does that work? And I think one of the most
everyone should like and subscribe. Just throwing that out there. If you want to get us a Christmas gift, like and subscribe.
Share with all your friends. Hand share this podcast. Actually just, download the transcript and print it out and pass it out to all your family and friends. Put it as a stocking stuffer. It'd be fantastic. Download all the past videos onto a thumbnail. Put it in a stocking. It's perfect. But one of the biggest tropes that everybody says is that consistent uploading. And I'm sure it probably works, but how does anybody truly know? And like saying like, the advice for you to more consistently upload is like, gee, thanks. Like, that's obvious. But the 2 minds aspect of it is Mr. Beast, obviously the best YouTuber in the world, says something completely different. He's like, all those hacks, all that shit doesn't matter. That's around the fringes. Just produce great content. And that's what matters most. And this is my issue, is like, you produce phenomenal content.
I was going to say, are you saying my content's not good enough?
No, the opposite. And what actually you said when you're like, average 10,000, I'm like, damn, that's, as you know, that's an upper echelon of podcast. And secondly, I'm like, I was thinking about, you remember the old Daniel Tosh bit? Like, he would tell a joke for like 10 minutes and he would be like, I'm whittling this joke down to one person. Like, this is so nuanced of a joke, where I'm like, I'm shocked that 10,000 people listen to your podcast, because it is that specific and that nuance. So that's the question. Is there 100,000 people out there that will listen to your podcast? So that's just one way to think about it. But 2, I do like the idea of you chopping up the pieces. And even though, I don't know, sometimes I get mad when people recycle the content, at least personally, because I don't know, the way I listen to stuff. I mean, we've seen even with capital allocators, they'll even, when they put out a new podcast with somebody, they'll put out the old podcast at the same time. So they'll do like a twofer, which is fine. And then like people, you know, as we always talk about, whether it's Hormozy or Vaynerchuk, you know, just chopping up their content and redistributing it across platforms. I think all that stuff works. But the question is, I think that you're struggling with is like, does that dilute your brand? Right? Like you do these amazing long form deep dives, and putting this same thing out there, though, even like the shorter version, I don't think it dilutes it because it's still the same content. The question is, like, do you upset people, or are people happy to be reminded? I mean, this is why people, you know, take notes or use highlights while they're reading books, and then they go back and look at their notes, because it takes a lot of time for things to sink in. So this is what I say, of two minds. I think it's a great way for you to consistently put out content out of this great long form podcast you're already doing.
Yeah. By the way, speaking of Hormozy, reusing content, I came across a video of his where he did an Instagram live for an hour and a half, and then took that recording and put it on YouTube, where the rest of the screen was just like a purple background, and he said Instagram live on X date. And I was like, this is just cross-platform posting, and you want to know what? It works. It's unbelievable that it works. The dilution thing is something I'm waffling on, right? Because if you go to my podcast right now, it is like you just get them in chronological order, and every episode's a full episode. My concern is that if I start doing these 15-minute clips now for the next 9 months or so, well, less than that, 6 months, because I'll probably have a season out in 6 months, it'll just be like, it'll almost dilute all the past episodes, and newcomers to the show won't even know those episodes necessarily exist, right? If they go to my iTunes feed or something like that. That said, people who are new to the show also right now might not know about past episodes, or might not have the time to go listen to 60 hours of content. So can I create value if I go back and cherry pick and say, I thought this was a really insightful comment, and I can add a little bit more of my personal view to the beginning, record a minute or two, why I wanted to highlight maybe for a given week of what's going on in the market, or I just think it's a particularly interesting comment, or I can compare and contrast. Sometimes I've asked guests the same question and they've given different answers. Hey, here's what this guest said. Here's what another guest said. Thought it was an interesting compare and contrast, and try to actually add value on top of the guest's answer with a little bit more of my personal commentary.
Yeah, there's so many. I just thinking about like how excited I get as probably when you're a hardcore audience. So like you said, you want to expand beyond the hardcore audience, because as a hardcore audience member, I'm like, when you have a new season that you're starting to like drip out, I'm like, fuck yes. Like, I'm excited for you, the artwork you're going to do. And I think about the creativity you put in, because you tell yourself this is just a season and then I'll be done. So you kill yourself on like creating new artwork, doing, you know, getting the right guests, preparing, recording properly, all of that stuff. And I'm not saying chopping it up takes any way away from that, but I think it is an interesting dynamic though, where people get really excited for your seasons. And it really begs the question that both of us struggle with, is like depth over breadth. Is like, yes, you want more people to listen to the podcast because you think obviously the content and the guests you have on is important and interesting. But it's also like, you know, does it really matter? Or is it better to have those hardcore guests? Like, do numbers matter to you at the end of the day?
All right. Well, it goes back to, are you reaching the right people? And what are you doing this for, right? For like, very selfishly, the podcast hits three things for me that I've talked about in the past. It's personal brand. It's personal network, right? For me, that I get to meet all these people and have really interesting conversations with them. And I have way more conversations with them than get recorded. And then it's networking, not networking, it's branding for my business, right? It gets people aware of what I do. You know, it's not lie about what some of this stuff is. It's clearly marketing for businesses we run. So the last one is where I go, if I knew it was all the gatekeepers and key people, key buyers that were listening, and I was just, you know, it was like, okay, like the random, you know, soccer coach dad who's never going to be a buyer is not in my audience. Like, okay, I don't care. But I don't feel like I've tapped into everyone with 10,000. I feel like the world's a lot bigger than that. So that's where I'm sort of struggling.
There's several things that I started to think about then too, and Andrew in the comments was on the kind of the same page I was. Is like he said the scripted podcast Risk of Ruin would be an interesting model for such an episode for Corey. And by the way, Risk of Ruin is a phenomenal podcast, one of my favorites.
I haven't heard
a lot
of that. Risk of Ruin.
Yeah, it's a lot of like the old school like card counters, poker players, and then it'll branch out into a little bit of finance. But you really like Risk of Ruin. I'll send you some of the good episodes from there. But part of it is, so I was thinking about a couple of different ways we could do it. Like, what if part of the chopping it up, maybe it's not on your podcast, maybe we use a different format, right? Do you put it out on YouTube, but then you start editing in maybe charts, graphs, or interstitial things, you know, kind of like we used to do? You know, most of your content's evergreen, so I'm not sure it would really benefit from the visual aspect, but you don't know. The other part is you could obviously put on different, you know, platforms like TikTok or some of these other private platforms that we've been talking to this week would be another interesting place to put it out. So you're, like you said, you're not cannibalizing your podcast audience, but at the same time you want to grow your podcast audience. The other thing that I had a light bulb moment was, what if we did like Rewatchables, where you and I go back over your podcast and talk about the things that we thought were most interesting and pulled the highlights out of there, the way they do like that Homeboy does like Rewatchables and everything like that. It's
See,
like we could almost do like Mystery Science 3000.
That's pretty interesting. Maybe like, because here's one of my fundamental problems is, by the way podcasts show up in your feed, when I don't touch my podcast for 9 months, all the new listens go to like the last 3 episodes in the prior season. And so what happens is, like, every season I stop, and then the last 3 episodes continue to garner listens for the next 9 months. And then I publish a whole bunch of new episodes, and all the other episodes, like, you know, there's episodes that have been out there for 5 years that at this point might get, I don't know, 5 to 10 listens a month. And it's like, that was a great episode. And maybe it's just on me to resurface those on Twitter or LinkedIn or whatever it is. But my thought was, well, what? The audio's there. It's great content. To your point, I design it to be evergreen, but it's evergreen without people listening to it in an evergreen sense, right? Like, I made evergreen content, but people aren't going back 5 years later to listen to it. So why? So my point, it's either like, why bother making it evergreen, or I need to do more to promote it.
Yeah, no, you nailed it, because it was making me think of, there's other platforms that I won't shit on here, but like where they originally started out with amazing evergreen content and then move much more towards topical, and have maybe had the original people they had on for evergreen content. Now they have them on every month, and it's just like, you're not getting any new information, where you'd be better off going back and re-listening or re-watching that evergreen content. Like, I think about like Grant Williams with Tony Deaton. Like, I watched that probably 5 or 6 times, and each time, like, hermeneutics, right? You pick out different nuggets every time you listen to it, because you're a changed person and you have a changed perspective every time you listen to it. So that's an interesting point. I think going back, like, you've had some amazing podcasts with really high quality evergreen content, and I'm actually mad at myself, honestly, for not going back and listening to some of them. So as I say that, and so, like, how do you promote that, right? Like, how do you do it in sound bites? Do you do it in snippets?
Yeah.
Do we do a Rewatchables? You know, is it on another platform? But then you still want to grow the podcast audience, so that makes it difficult.
Well, how do you think about this for your podcast, right? I've urged you, I've said a number of times, you've had so many amazing long vol guests on, you should just take their transcripts and turn it into a book. And make it, you know, hire someone to edit it and turn it into a book on long vol, even if it's a free or 99-cent self-published book on Amazon, right? I think there's a missed opportunity there, not necessarily in the monetization, but in the branding, right? Or as a giveaway to some of your clients. Like, I think there's so much phenomenal content there. Curious if you ever looked at the numbers of your podcast to see what old episodes garner.
Yeah, they're like, it's similar, like you said, it dies out pretty quickly, and then depends on the guest. You know, it's around your numbers, but less than your numbers. Just depend really on, you know, like you said, the popularity of the guest. But at the same time, you're absolutely right. It was making me think when you were saying that, it's like, you know, I know you always joke with me, I should put a book together for, like, you know, vol market wizards or whatever. But like, what's the new market wizard that we both do? Because yours is like quant wizards, but it's not just quant. So it's like, is it booty wizards? No, like, we can't use that. But I'm like, maybe instead of market wizards, we need to put out our own series of content, and then you do it both in published book form. But then we can maybe remaster the audio content, or pick out those snippets that we used in the book. Like, maybe you're not publishing the full content. I tell you though, the hard part is right now, I feel like we're getting into almost like a circle jerk session, right? Like of how do we put out more of our own content, get people to listen to our content. But what we're really
But
saying
it's
is like
not
the guests have been amazing. No,
the
we're saying it's
guest.
like the guests have been amazing, not Corey and I.
I
But
don't
it just
I don't
almost
want to go
started to feel
back to
like that.
old Pirates episodes and say like Corey said something really smart. No, I know for a fact I didn't. It's my guests who are phenomenal that I sit there and I go, it's a gold mine of really interesting things. And I've thought of like, do I hire some, finance intern that wants to listen to an episode a week and tell me what they thought was most interesting? Maybe. I don't know. I don't know what the answer is in terms of like how to do this without just adding more work on my plate, which probably has to start that way anyway to figure out what the right process is. But it seems to me from a business perspective, talking to like, go, okay, about this show, like what are we trying to focus on, growing businesses and that sort of stuff. Like there's a missed opportunity here in the way that I am running my own podcast from a marketing angle. And I don't know what the answer is.
But some of the in the comments, I've been like, why isn't there like a podcast digest from like Menahem and stuff like that? There is like Meb Faber has his idea farm, and where they've tried to do this. Mebs are trying to figure this out for years and hasn't really been able to figure it out. Although if you subscribe to Idea Farm, they try to break down podcasts for you. Our homie Tyler in the background there has his Sunday Neat. So if you file Tyler Rangioni on Twitter, is that Tyler's handle on Twitter? I don't even know what it is. We'll ask him when we get him on. But he always does his Sunday breakdown of the best podcasts he's listened to across kind of like finance and everything else. So like everything, there's curators out there. It's just finding the right curators that agree with maybe the way you look at things. So that's always hard to find. Do you have anything else on this subject before I change subjects at all? Or?
No, I've lamented enough.
I was thinking about like this once again, this idea of holding two opposing ideas in your mind at the same time. And I've noticed a lot of the either financial media or like the written side and all that stuff from, all the people that, are around both of us this end of year, December, right? Everybody either has two opposing ideas, right? The Santa rally is going to happen because, probabilities are the Santa rally is going to happen. And then like my homie Zed Francis at Convexitas had called for, we're going to see a December 2018 style slow drip down as the target date funds had to take all the distributions for the people over 70 and a half years old. And so far, Zed's kind of been right. But always the question is like, everybody's still guessing, right? Nobody actually knows. So how do you even pre-position for the end of the year?
Has Zed been right because his thesis was right? Or in
Right.
reality, it's like the market's either up or down? Like how down did he have to be for him to be like, have some confidence in his view? Did he quantify exactly how much they had to sell and therefore what the market impact would be? Like that's where, again, you and I sort of hate a lot of that macro style work because it's so unquantifiable. I personally always pray for the Santa rally because it makes my Christmas that much better. It's not fun going into Christmas when December's been a train wreck. 2018 is still like, I've got PTSD from 2018. So
even though we both run like hedging books, we both still want like rallies. I mean, because like we said, we have family and friends and holidays. Like it's much more enjoyable when everybody's happier. But also,
yes.
what do you think about like going back to this cash flow thing? I think it was on. It might have been Mobison, but it was probably somebody else. They're saying like the wealth effect is like it's 5x for like your personal home. So with housing prices like teetering over, that affects people's like Santa rally more than their stock portfolio does. Or do you think that's changed over time?
I think that's one of those information or availability of information changes things for people. Like I wonder if I could rewind the clock 30 years to pre-Redfin, pre-quantitative, housing measures, housing index. Like how sensitive were people to their house value, right? I can now go on any given day and get some sort of estimate. It's probably complete bullshit, but estimate as to what a piece of property is worth. And suddenly people are like mentally marking to market not only their stock portfolio, but now their potentially fairly illiquid real estate book. And that wealth effect is important, right? It has a pro-cyclical effect into the economy. So I wonder if the wealth effect, this is just totally spitballing here, but I wonder if the wealth effect has become a more pronounced effect in the economy because real estate is such an important part of people's assets, and it's now more obvious whether it's right or wrong, they have a price to anchor to.
It is in two ways. And one, I think also like boomers portfolios are larger, even relative to their houses than they've been in the last few decades. But like you said, if you go back even farther, that wasn't the case at all. But it goes right against my argument I keep making is like, historically, our houses have been our caves, right? Like you just buy a house, you pay it off over 30, 40 years, and you stay in that for your lifetime. It took like the boomer generation to start flipping houses and treating it like an investment. And then more recently, like you said, one, with the Zillows, the Redfins of the world, one, you get this, mark to market somewhat on a daily basis. But even worse, we start to even, fractionalize it and treat it like a financialization of a product. And people, you could sell equity in your house and everything. And my argument has been is like, as soon as we've gotten to this stage, you have to throw out 100 years of housing data because it's dramatically a different financialized product now. Same thing that now they're doing with these fractional ownerships of art, wine, etc. And they go, well, wine hasn't gone down for the last 100. All that stuff is like, throw all that shit out the window. As soon as you have this financialization of these products and rehypothecation and ways to put granularity and sell pieces of equity and like it is no longer the same thing that we've thought about for hundreds of years.
100% agree. As soon as you introduce the ability for something that was illiquid to become liquid, you financialize it, it totally changes the characteristics, not only in its valuation, moving from illiquid to liquid, but also in the way it trades relative to other assets. And you saw like commodities is the greatest example of this. There were a number of studies that came out in the latter half of the 2000s that showed that when Goldman created the GSCI index, and then there was an increased demand among institutions for access to that index, the commodities within that index became more highly correlated to stocks and bonds and decoupled more from those commodities that were not in the index, right? The financialization of commodities actually changed the behavior of commodity prices. You saw an effect acutely within the front month contracts as well, because that's what most people were trading. And so the front month contracts got driven up relative to the rest of the contracts because there was suddenly a new inflow of money. So yes, I mean, anytime you unlock an asset class from a liquidity perspective or financialize it via fractionalization, it's going to fundamentally change how that asset class behaves.
Even in the comments, Brian said it's the boomers' fault equals evergreen, and I don't want to shit on boomers. I think it's just because I don't believe in the generational thing or Neil Howard or that stuff. But it's just like, yeah, they got lucky and they rode that tide. It just so happens that they were the first generation that figured out how to buy 4, 5, 6 houses, flip them, do all that stuff. It's just their generation overrode this at the same time we had this huge hyper financialization of products. Go ahead. Sorry, you were going to say.
I was going to say part of not the boomer thing, but part of my issue here as well. We talked about the availability of data for housing. I think another fundamental problem here is people are relying on those estimates as being accurate and they're anchoring to them. When you don't know what the price of something is till you try to sell it, right? Fundamentally, the price for something is the price someone else is willing to pay. And I think I mentioned a couple episodes back, I was looking at real estate in my neighborhood that I just moved to, and there was a 0.8 acre lot that was asking for 1.8 million. And if I looked at the price graph of like how much it was estimated for, it was like 2020, 2021, it was like 600,000. And then all of a sudden it jumped to 1.8 million, almost as if them putting a listing out for 1.8 million made the algorithm say, oh, there's an ask, right? That's market information. That's what someone thinks it's valued at. I need to incorporate that. There's no way it's worth 1.8 million because the most you could do is split that into 2 lots, the way this lot is designed. And 0.4 acre lots in my area with a house are selling for 500,000, maybe 600,000. So, one of my primary tenets that I learned in financial engineering is pricing is replication. If you want to price something, replicate it. Well, if I can replicate 2 houses on there and it's going to sell for, $600,000 each, there's no way that property is worth 1.8 million.
My favorite 2 things is price is just what somebody else is willing to pay for it, but you also have to wait for that check to clear. And my other favorite one is you never know how much somebody's worth till they declare bankruptcy. But before we bring Tyler on, I have one more thing for this for the year. They're thinking of 2 minds, and this is because a lot of our friends are doing their end of the year wrap up and their prognostications for next year. So right away, Corey, 2023, inflation or deflation?
Oh boy.
Both.
In some areas there will be inflation, and in other areas deflation. What areas I won't tell you. That's for me to know.
This is why it shows you're a genius. You can hold two opposing ideas in your mind at the same
Yes.
time. I don't know. Did Tyler know he was coming on? I see him like doing his hair in the background and everything, making sure he looks good.
He's making sure his mustache looks better than mine. I think he dyes his mustache. It looks so good. Let's get in here, Tyler.
Get in here, man. While he's figuring out his mustache grooming style. Corey, this has been my new afternoon treats is espresso and tonics. It's not very cold weather friendly, but it gives you a little hint of sweetness in the afternoon, like you're having your afternoon macaroon as you like to do at Lauderay. But it's just espresso and tonic.
You know, espresso and tonic, there was a bar in Venice Beach, California that has a hidden menu on the back of this picture right next to the cash register. So you have to go to the cash register. There's a picture frame there. You have to pick up the picture frame, turn it around. There's a whole hidden menu of drinks you could get. And that was one of them. It was like this tonic espresso thing. And I was like, this sounds horrible. And I ordered it and I was like, that's actually pretty good.
Yeah, especially even then, you think it's even more horrible to have lemon with it, but it's actually even better that way. You think it'd be clashing. But we'll start with Tyler. So I want to know from both of you guys. I think you can guess about me, but how are you guys with holiday spirit and holiday cheer? I have my guesses on both you react, but we'll start with Tyler. Like, how are the holidays for you?
Pretty pumped up. I'm optimistic. I have like a 5-step commute. I wake up, it's snowing outside. I put a little Bailey's in my coffee. You know, I'm having fun.
Corey?
I freaking love the holidays, man. The hardest part for me is like my nephew is finally old enough to like watch a bunch of holiday movies, and I'm trying to figure out which ones my sister will like allow me to watch with him. Yeah, it's a question of like, oh, is something too scary, or oh, was that one actually like secretly like super racist because it was made in the 1950s. So I'm like trying to go through all these old, or like he's old enough to watch like Charlie Brown Christmas, which is 30 minutes, but he's not going to sit down for 2 hours, right? So it's like trying to find the right stuff. I haven't found it yet, but we do and have been doing a family gingerbread house contest for my entire life. My wife and I ordered special candy. No one knows. We've got a whole theme. No one knows what it is. We ordered our own candy. I am going to crush my nephew. This is where I won't hold back.
It seems like I have no interest in doing that.
No, he's going to be tapped out in 5 minutes, but I'm here to win. I came to win.
There was like, I think there's a little viral video the other day of Messi playing in the backyard with his kids and his wife's yelling like, let them play, let them win. And he's just like dominating his kids.
There's this guy on YouTube who has this whole shtick of like a super intense dad. I guess he actually is like in the WWE, but in like the lower tiers. And so it'll be a video of him like challenging his daughter to a foot race. And she's like 3. And he'll start and he'll just smoke her. And then he'll just like get in her face and be like, "You're so slow." And it's like, this isn't funny. This poor girl is traumatized, but it's really funny. Because he'll take it to the extreme of like crab walk races, you know? Like, it's great.
So I heard Kevin Muir on the Market Huddle. He was actually playing Scrabble with his wife. And she was like, well, why do you want to win? Like, you're playing to win the whole time. And he's like, that's the point.
My wife... I had to stop playing Scrabble with her. I hope she never
My
wife. I had to stop playing Scrabble with her because her way of playing Scrabble, like when I play a game like that, I don't always play to win. I just play to like be entertained, and I don't want to take forever with my turn. My wife is like, I am going to evaluate every single possible option I have on the board until I find the best one. And her turn will take 15 minutes. And she's like, well, why don't you want to play with me? I'm like, because it's a 6-hour event. Like, my turn will be 30 seconds. I'm like, all right, that's good enough. No, for her, it's like, I will find the optimal decision. And by the way, I think this really sums up our relationship, personally.
But Tyler, you're right. I listened to that Kevin Muir as well. By the way, shout out to Market Huddle, great podcast.
They're great.
You're saying the same thing. It's like he was playing with his wife, and she's like, "You're playing to win." He's like, "Yeah, that's the point." And then, but she was better at words. So then eventually he quit once she figured out the strategy behind it. He was like, "I'm done playing. I'm done playing." And then speaking of holiday movies, it's in Italy. I can't remember if it's Christmas Day or New Year's Day. The number one movie in the country they always play on like local TV is Trading Places for some reason.
Really?
Yeah. Yeah, one of like the original, decades ago, the main, like public channel in Italy on like Christmas or New Year's Day played Trading Places once, and then they just it just kind of stuck, and now like that's what all Italians put on like on Christmas Day is Trading Places, which is arguably the best trading movie of all time. And shout out to Philadelphia, where Tyler and I get to enjoy the downtown Philly scenes as well.
A little blizzard.
So, one of the things I've noticed, I actually listen to a lot of music on YouTube, like those like music for work type channels. And so I've been trying to listen to holiday music to get in the spirit. And one of the really funny things is like YouTube people definitely optimize for the long tail. So it'll be like search for holiday music and it'll be like holiday music, but you're in the Hogwarts cafeteria. Or like holiday music, but you're in a hobbit hole. And it's like weird holiday Lord of the Rings music. And you're like, this is like really, people go hyper niche on this search stuff. I'm sure it works for them. But I was like, I did not know that there was an entire 4 hours of Hogwarts holiday music that was available.
Have you ever listened to, or I'm sure you've read it, how much Mariah Carey makes off of All I Want for Christmas Is You on streaming every like holiday? It's absolutely insane.
So I heard recently it was $2 million a year. I would have guessed
I think it's
more.
10x that. I think it's like 20 million a year.
I would have guessed way more.
We should probably fact check that before we come on. But speaking of which, I should have checked this out before. Have you seen that they put out the new Top Gun on like Epix and Paramount now? It's like they're just running marathons now. How much did they have to pay for that film to go like right from theater, like just direct onto their platform?
Probably a lot. But I want to go back to Mariah Carey really quickly.
Oh, yeah, please.
So when was the last time a song broke into the acceptable Christmas playlist, right? Like of modern music, I would argue Mariah Carey was really the last one to make it in. And then when you think about holiday music, it jumps back decades. One of the things I think is really interesting though, is there was like all of a sudden a whole bunch of songs came into like the holiday realm in like the 60s and 70s.
Yeah.
Both Paul McCartney and John Lennon got songs, acceptable songs in the holiday catalog. But there's a whole bunch of songs that came out there, and then you've got like a bunch of songs from the 20s and 30s, back when all of a sudden you could get recordings of music. But it's like there's definitely this nostalgia factor of I'm listening to what the music my parents like, but I'm trying to understand like how did Paul McCartney and Lennon both break into the holiday catalog? I mean, their music's great, but I'm like, what does it take to break in at this point?
Like you said, every pop star has tried to put out a holiday song and it just hasn't worked because they're all trying to replicate Mariah Carey. And by the way, it looks like Tyler found it. You were right. It was like $3 million a year.
Yeah, I would have guessed.
It's a hell of a coupon.
More.
I know, but still,
I wonder,
how many decades later?
Oh, so we've talked about this in the past, way back on Pirates, of like monetizing music, right? That because I think Justin Bieber right now is in the middle of selling his entire catalog for like $280 million. Right.
Well,
so Mariah Carey, like I would be like, that is a bond. I think that thing's not. I bet it's going to be $3 million a year for the next 30 years. That thing's in, getting played every Christmas season.
But I also, like you said, I've been watching. There's a whole Spotify series on Netflix, like how it's obviously dramas about how they started. But I think you and I talked before. They're essentially like payola now, and basically they sold. The only way they were able to work is they sold all of the interest, like in their company, for the majority interest to the record companies. So still now, it's even like the record companies kind of still choose who really gets streamed the most, and they still control all that flow at the end of the day. And then it's like I said, they can pay more or get that payola on the back end. So it's like, yeah, how hard or difficult is it to break into the streaming? By the way, there's Tyler can bring in the last question on the chat right now from the Booty Crew is a great one for Corey.
By the way, this is why my music hasn't taken off on Spotify. Question of the day: does Jason and/or Corey have a pirate on the top of their tree? I don't, only because I don't have a tree. Despite all my holiday enthusiasm, I am not spending the holidays at my own place, so I don't have a tree.
Oh man, we gotta figure out some pirate ornaments. Maybe that's the swag for next year. Like we gotta figure out pirate ornaments. I didn't even think about that. That's a great question. And
that was
me
staring us in the face.
It was staring us in the face. I'm at my in-laws. I'm sure both of you can guess I'm a bit of a Scrooge, so I just try my best to not piss off my girlfriend and her family, and I just try to go along to get along.
Or a Grinch?
Grinch. I'm sorry, Grinch.
Both.
Yeah, both.
It can be a little like cannonball or like.
I'm pretty sure if Tiny Tim came up to you, you'd help him out. Like I don't think you're a full Scrooge.
No, I'm kicking those sports
cut the stream.
Quickly cut it.
All right. Before we jump from here, what number one holiday movie from each of you? What's the number one holiday movie in your mind?
I already said it. Die Hard. Easy.
No.
Nakatomi Towers. What's yours, Corey?
That's a good question. I gotta go old and nostalgic, like something I can watch with young kids, and it's gonna have to either be the Grinch or the old Rudolph movie, like the claymation one.
Oh, that's a good one.
Yukon Cornelius.
Oh, that one's classic. That is a classic. You know, like I said, I like the Italian with the trading places, but this is gonna shock you maybe. It's like I am a sucker for a rom-com. So like Love Actually or The Family Stone. Oh, those are just classics.
We should have done it. We should have done a Christmas movie draft, or just a Christmas draft. I would have been like eggnog, ornaments. Just a free for all.
Yeah, I don't think our Thanksgiving draft worked out too well.
I don't know. I thought it was
some
great.
Wild takes.
That's what I'm saying. You went all classic, and I'm out of the left field. So yeah, who knows where I would have gone with that? But otherwise,
you would have been like pine needles. I know you. You had some real obscure one.
Mistletoe. But shout out to the Booty Crew. Happy holidays for everybody. Speaking of, Corey's thinking about how to grow his podcast. We try to make a show about nothing that whittles down to just 12 followers or listeners, but that's the hardcore Booty Crew. So we appreciate you. Happy holidays to you and your families. I hope everybody has a great past year and a prosperous next year, and all those lovely things. Corey, or you want to take us out, or we should make Tyler take us out for once? Tyler's got to do a disclaimer and take us out. Look at him shaking his head.
I'll press the button right now.
Yeah. Listen, everyone. Again, nothing here has been advice. But as Jason said, I hope you have a wonderful, happy, and healthy holiday season. Stay safe, and we'll see you next week.